Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the Greedy Trader channel. It's awesome to have you guys back here. For those of you who are new to the channel, this is where we talk about all things market profile. Now, of course, for those of you who have been watching me for some time, then this is just another video. So today I wanted to talk specifically about two things that professional traders often do when they are looking at their market profile charts or they're trying to put on a trade. Now, some of this is, well, one of these is going to be a strategy, something that professional traders tend to look at. It's what gives them an effective edge, right? So when they come in for a trade, it helps them with the positioning, the trade location. So we're going to cover some of that. Now, I think it's been a couple of videos where I haven't really touched on, the trading strategy side, but as the channel keeps growing, I'm thinking I'm going to do a lot more of that to give people an idea. Now, of course, market profile is all about segmentation. So it is the ability to take a market, segment it, and see what's going on within it, and be able to segment it over any kind of time frame and get a very closer view in terms of what's going on inside of it. And that's kind of why professionals use it, because it really does take away a lot of the anxiety. So for example, you're looking at a profile chart. This is a 4-hour segmentation, and this can observe price action within the day frame, or it can observe price action within the longer frame. As you can see, I've got a lot more data that I can review historically as well as in real time. And we're going to talk through some of this. I'm a huge cable trader. I've been a cable trader for quite a few years now. I do a lot more of option selling. So I sell premium, which is one of the most lucrative ways today in 2023 to make money in the markets. Now, options generally approached from a very sort of buy perspective or long option perspective. So there's a lot of emphasis on buying delta. However, we can't ignore the fact that theta exists, and that is the reason why I sell options, because options have a decay factor. Now, of course, if you buy options and you manage to make it work, then that's great. But for me, I like to engage in high probability situations. I don't want to get into a situation wherein I have to think too much about that specific trade, or I need to think so much about the probability of that trade turning out successful. Because really and truly, what I want to be able to do is know that there is a 80 to 90% probability that that particular situation is going to go the way I've perceived it, right? So it does take, and for that you need an edge. You definitely need some kind of edge within an asset class, for example, or you might need an edge within a specific sector if you trade equities, or you might need an edge within the way you analyze data. And that's of course what we consider when we deal with things like CFDs or futures. This is what we're considering when we're doing this, is we're collecting data in a way that increases the probability of us the probability of us succeeding in the trade. Yeah, I'm a bit awful on my throat today for some reason, but anyway, and I haven't done a lot of talking. Yeah, so maybe I'm coming down with something, I don't know, but anyway, I'm sure nothing a little lemon and honey can't solve. Anyway, moving on. So one of the things I'm going to talk about today is what we call expected move, right? And I'm going to talk about gaps, because these are two important aspects that most professionals look at when they're trying to determine whether a market is undervalued, overvalued, or volatility. Now, of course, for someone who deals in options, I'm very familiar with implied volatility. I'm very familiar with expected moves, right? And I'm very familiar in terms of how to kind of figure out what that's going to be. Now, if you're not at that level of sophistication yet with your trading or investment, then some of this might go whoosh over your head. But I'm hoping that I can break this down sufficiently so it makes sense for someone who is coming into the business and wants to understand a lot what this looks like, right? And FYI, I am long on cable today, of course, and I'll tell you exactly why. And I will also tell you what my expected move is and why I'm actually consider that an expected move, right? So obviously the market's going up at the moment, which is great. However, we're going to talk about this a little bit more in depth as to the why. And this should start to look a little bit clearer as to why I'd position that way. And also, one of the things I always say is that you want to pick something, like you want to pick an idea that is very high probability that you can repeat consistently, right? And that is pretty much the primary ingredient that professional traders have, that may be retail or, you know, those traders who like to follow influencers. I'm promising today I'm not going to have a go at influencers. I absolutely despise trading influencers. They're all over the place. Twitter, you name it, they're all there, and they're all telling you guys that you can make millions and millions trading, and it's so easy, and you just need to draw that line, and you need to have a, you know, good risk management and all the other cliches. But what none of them are talking about is how do you do it, or how do they do it? You know, instead, well, we all know the deal. You know, if you want to find out how they do it, then of course it's going to cost you. But then again, I'm a big proponent. It's a business model, right? Value should not be given away for free, because then people don't value it, they don't respect it, and often it gets tarnished. It doesn't get looked at. It doesn't get the attention it needs, to the detriment of the person given the value and the person receiving the value. So in my opinion, you've got to pay for value. If you're getting shit for free, there's a 90% chance that you're not going to be able to digest it. The person offering that is not going to feel like they're getting their value's worth, especially if they know they're offering value. They're not going to want to give you for free. It will make like 0 cents for their time and for their own self-confidence of the fact that they're putting value out there in the world. So they need to be compensated in kind. So I'm not saying that influencers shouldn't charge you money for giving you value, but the problem I have is they don't give you any value, right? They give you zero value. They tell you shit that you can literally find on Google, for example, or, you know, they tell you stuff that they've told so many other people, or they've put in a very sort of light, flashy way. You know, I'm $1 million man, etc., etc. And then you look at maybe 1 or 2 very simple strategies that they put out there, and some of people really gullible to believe that actually that guy that says they make millions a month is actually putting out this strategy that everyone knows, right? It doesn't make any sense, right? Like, how does that work? You know, they'll have like a candlestick setup or something, and they'll be like, yeah, this is it, just buy here, buy the breakout here, and, you know, and get paid every day. It doesn't make any sense, right? So it means that those people have to be doing something else that they're not telling you, because that's what allows them to keep pushing what's easy, that they know that you're going to gravitate to because you want some spoon feeding, and they know that if they tell you really what they're doing, which is the hard stuff, right, the difficulty of it, you're not going to want to do it. You're going to think, oh, you know, this looks too hard, maybe I go back to my 9 to 5 or something. So again, or you'd be like, no, I'm going to find, you know, someone else who can teach me a little bit easier. So it's the feedback that they're all assessing, and they're like, look, I just want to get rich. I really don't care about, you know, these people I'm showing stuff. Literally, I just want to get rich. And that is where the problem lies. In this channel, we don't do this, we won't do this, and I will not do this. And I insist that, you know what, I've been in the game for a long time. For me, it's from like 15 years. Like, there's just no way that's happening, right? So because it's just pointless, like literally it is just pointless. But anyway, let's talk about expected move. Now, one of the things that you want to do as a profile trader is you want to understand how far does your asset go, right? What's the expected move of your asset? So if you're trading this and you're about to enter, where are you relative to the expected move? Okay, so I'll just give an example looking at yesterday's profile, right? Because that's a bit easier. Right, so here we are. There we go. Right, so we can see here that very early on in the segment, we started to move up. Now, if we just simply take our cursor here, we can see that we did about 70 ticks from the low to the high for the day, right? And then we retreated back, and then we closed somewhere down here, 24 ticks from the absolute low, right? So that's the overall expected move we got yesterday. Now, if we look at the day before, taking the same, sort of metrics into context, I'm just going to pull this out a little bit. Right, just so we can do the measurement here, just condense it. And then this was about 112, and then we pulled back, and then we went even considerably lower on volatility and so on, right? So not all of some of these days there's news events which expand the volatility. So what we want to discover is what is an average expected move in this market, right? So on a day-to-day basis, what can we hope to get from the absolute peak of the market to the bottom of the market, right? Which does two things for us. Firstly, it helps us understand how far the market has traveled today, right? We're not thinking about yesterday, so a lot of people might look at the move from here to here across the day as what is significant, but actually what's really significant is today's volatility, right? So if we're trading down here, and let's say our expected volatility is going to be on average, let's say between 50 and 70 ticks on the sort of mid side of things, right, which is what we expect to get, then that tells us that roughly if this turns out to be a great day, then we should be from low to bottom, we should be about 127.35, right? Point in case. Now, so here it is again, guys. This is the stuff that influencers won't talk about because they don't understand this. This is not what they're considering, right? It's like they're not thinking about things like this. For them, it's just about making it easy for you. Whilst this is an easy calculation, that is absolutely fair. It is an easy calculation to make, but how many people sit down and think about this aspect of it? No, they don't. Secondly, there are other statistical benchmarks which I won't get into today, like for example, there's value highs that are going to restrict this. This is obviously traders' perception of fair value. And obviously I've heard traders describe sometimes these elongated profiles as fair value areas, for example, which I see another trading influencer, quote unquote, is talking a lot about this. And whilst to be fair to that trading influencer, he does seem to have an accumulation of knowledge, and he's willing to share that, obviously, with some kind of reward down the line. So some people do have funnels like this. Of course, even me myself, I don't provide all of this stuff for free. I do want to help the industry, but as a professional manager, I'm not necessarily trying to be like, some kind of Robin Hood or something. Instead, what I'm trying to do is show you what the best way is to do this. And if you feel like it's worth your time spending that with me helping you, then of course I will get some value out of you, but I can assure you the value you get back, it will be absolutely fair, which is why I spend the time, of course, trying to show you what you could be doing wrong and how I could help you do that right. That's absolutely fair, right? There is no ifs or buts about it. No one should be giving anyone stuff for free. If they're doing that, I'm pretty sure it's going to be worthless. And if it's not worthless, the person that is receiving it is going to soon discover that they're about to make it worthless, because there would just not be the same passion and time or energy going into disseminating that information in a way that's understandable. Also, it tells you a lot about the person giving the information, because it means that they themselves don't value the information. I mean, it's a bit like if you were walking down the road and you had a piece of information that said there were diamonds under the road, and you picked off like 90% of the diamonds and there were 10% left, and you're like, dude, I don't need these 10%. I want to share them with someone, right? You're gonna be like, dude, what are you gonna give me if I told you that you could get access to this, right? This is pretty much the entire, this is the entire capitalist idea, right? It's that, it's value for value. I offer you value, you give me money in return, right? And this is the capitalist model. Why people pretend that this is no longer the case is beyond me. So again, if I had that kind of value and I was to tell someone, I know that it's going to instantly change their lives. I'm not going to do that on a whim, right? I'm not going to do that for free. There's no matter what you could say to me. It's like, go to hell. I'm fine with my value. And you don't have to come to me. It's perfectly okay. I'll just make my money in silence. That's that. End of story. There are people like that who they're just selfish. They're not going to share anything. It's fine. I'll make my money. Everyone else can go to hell. But then, of course, we've got to acknowledge that some people want to be altruistic, but in between that demographic, they're just people who are just full of shit. There's nothing you can do about it. But anyway, I did promise I'm not going to rant on. But yeah, so back to the idea of an expected move. So as far as today goes, in my long position, I would estimate that we're going to get up here. So I'm going to cap that to maybe 52 for reasons that, again, I don't want to go too deep into, but we have responsive sellers. We are pretty much going to be trading close enough, in my opinion, to value high, which can really restrict the day. And of course, as we get into the US session, we might get a big turnaround. So again, no one's probably going to want to take this higher from here. Again, if you think like a professional, it's all about value. So if you're buying the top of a market, then you're kind of restricting the value you can get, right? Because again, it's all down to expected move. So that is one of the key things that professionals might look at, is expected move, because you need to know where that is, because then it gives your trade a high probability of working. And when you see your trade, maybe say for example you are long out of bids, then if the trade is working back, like we just saw with this profile that's segmented, it did work back a little bit and then rebounded, right? So you don't get too anxious about seeing that kind of price action. Now the other element is gaps, right? So it doesn't matter what segment you're looking at or what segmentation. So it could be a weekly, it could be a 4-hourly profile, whatever you're looking at, you are going to see gaps in value, right? Now these gaps in values are market inefficiencies. So when we say gap in value, there is a significant gap between where the next profile segment opened versus the value low of the prior segment, right? Which is the statistical fair value low, right? Now, if you can see that, then you know that no matter how low this market goes, we need to recover that value. So it's a good opportunity to accurately gauge expected move. That's the importance of gaps, because if I can see that there's a gap up here, then gaps are 100% probability they will be filled within a given time frame, right? If you're looking at a weekly segment, it might be 6 to 8 weeks for that gap to fill. If you're looking at a 4-hourly segment, then that would fill a lot quicker, so you could have that filled in about 2 to 3 days, right? So it tells you that the market is overstretched, there's an inefficiency, so we're likely going to see an increase in volatility. Now that information does wonders for you, because not only if you're positioned short, you would cover quick enough whenever you see any kind of sign that they're in a pending reversal. Secondly, if you are going to go with the long side of this, you are targeting the gap, because that's where the fill is going to come. So it wouldn't matter that we saw a responsive seller step in and hold the market down. You're just going to get volatility. In the long run, we should trade higher and trade the gap before we think about doing any sells. So we can see that example here. We had a gap in value here. We traded up, filled the gap, and then walked our way lower. Again, if we look around, we will see similar examples. Another one's here. We traded lower, filled the gap really quickly, went a little bit higher, we filled this gap earlier, but we'll talk about that one. We filled the gap and then went a little bit higher and then sold off. Again, you can see an example here. We had a gap in value here. We came down, went a little bit lower, and then returned, filled the gap, and then sold off. Right, so gaps tend to not stick around for long, right? Because they're inefficiencies and the market tends to want to deal with them quickly. Another good example is we had a huge gap here. Market traded up. We had a lot of order flow, which is technically where we tend to see a lot of support, just because it's what we call minus development. But again, I won't get into that. So we popped down, took in a responsive buyer, filled the gap, and literally filled close enough the gap, but we didn't actually fill it. And this is what I always say traders work out, is that did we actually fill that gap? We didn't, we reversed, but what did we come down and do later is fill that gap before going higher. So the truth is that whilst we didn't fill it same day, it took about 2 days, but we filled it. So if I was getting short this market at the top, I'm looking to get out when this gap is filled, right? So that gives me a very accurate idea of expected move, right? Is because I can identify where gaps are and how quickly they're going to get filled based on their location, and that allows me to adjust my targeting accordingly. And it doesn't matter what we're looking at. Whenever you see a gap present that isn't properly filled, like literally you need to fill it to the line of the value low, it's a statistical measure, but we need to fill that. It doesn't matter what you're looking at, what segment you're looking at, you got to fill that. I think the only gaps that I would say tend to stay longer are monthly gaps, right? Monthly gaps sometimes can take ages to fill. We're talking like maybe 8 to 12 months, which is a year to fill. So I don't pay too much attention to those because it's such a macro outlook that it doesn't make any sense. However, when we're looking at these shorter time frame inefficiencies, they are good information. So guys, I hope you learned a lot in this session, because I actually made this a complete lecture or teaching session, which wasn't the intention, but hey, I guess see this as value, right? So if you understand these two things, then you are going to start to really up your game in terms of how you trade with Market Profile. Again, if you want to find a little bit more about what we do, we have a free Discord server, just check the link below and you can learn and get a very good idea about how we tend to approach things as professional traders. Now, I guarantee you guys, you won't see too many channels like me. You know, again, it is what it is. Very few people are interested in telling you how this business really is. They're a lot more focused on filling their own pockets, and that's great. It's capitalism, what can we say? But once again, I hope you enjoyed the video, and until my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?